Over the weekend, BTC broke through 19,000, trading below the 2017 all-time high and reaching the 17,000 range. With this, it begs the question, how low can BTC go, and where is the historical trading volume support? Hi everyone, I'm Nathan, senior researcher over at Collective Shift, where we share the latest and best crypto analysis and advice on this channel to help you create more wealth and opportunity. In this video, we are going to be covering BTC and answering those questions. Where is there support for BTC below 19,000? How low can BTC go this year? And when and where is the low point for the bear market in 2022? Now, before we dive in, please take a moment, if you're enjoying the content, to like, subscribe, and turn on notifications so you don't miss out on our latest advice. Also, head over to collectiveshift.io, where we have asset pages, airdrop pages, and our investment portfolios, which are not mock portfolios, they are real. And with that, no more time to lose. Let's get right into the analysis. If we move from our BTC asset page over to a recent article of mine, looking at the daily close price of BTC per CoinGecko, and simply having a look at how many days has BTC closed between certain price ranges. We did this earlier this year, and we noticed that there was thin trading during the 20,000 to 30,000 range for BTC, and this was when BTC was trading in the 40,000, 50,000s, and it was indicating that potentially we could trade back in the 20,000s, and yes, we have in mid-2022. But how low can we go, and where is the trading volume support? So looking at the number of days that BTC has closed within a price range on the left, let me zoom in once or twice. We can see that up to about 3,000 to 4,000 range, we've got about 132 days traded. Very thin volume between 2,000 and 3,000. I don't think BTC is going to go below the 2018 bear market low of around 3,000. So much more concerned with numbers above 3,000. Some very thin trading between 4,000 and 6,000, only 74 days and 65 days respectively. Be very interesting to see if BTC ever gets back to the 4,000, the 5,000 range and adds in a few days here. Because after these two periods, we do have trading days above 150 for the 6,000 through 10,000 range. So from 6,000 all the way to 10,000, each 1,000 price increment has had 150 days or more of trading volume, or days that it have closed. And then after that, the days drop off very, very quickly. So we've got this wall of support between 6,000 and 10,000 that breaks off that slows down a little bit at 10,000 to 11,000. We only have 114 days traded, and then significantly drops off once we hit 11,000 to 12,000, 88 days closed, and then 12,000 to 13,000 we drop off to 11 days. So, and as we can see, from 12,000 all the way to 20,000, all of those $1,000 price increments have very thin trading volume or days closed, with only about 10 to 20 days closed between those price intervals and those price ranges. So we've got a lot of gaps to fill in potentially between 12,000 and 20,000, but we do have support building at around 10,000 to 11,000, or 10,000 to 12,000, I should say. So that's quickly looking at the daily close price of BTC at different price ranges. And now let's look at that and compare it to the BTC all-time index using weekly candles. So this goes all the way back to 2013. We won't focus on that in this video, and we'll zoom in a little bit more into the coming period in late 2022. In our prior video, we'd really focused on this December-November 2020 period when BTC was trading at about 19,000, 20,000, and it broke through. Now that we've gone below 19,000 and we've traded in the 17,000 range, my eyes are looking lower. And we've identified a few different key support ranges here that we can walk through really quickly. Going from lowest two highest so that we can write off a few prices that I just don't think are reasonable for BTC in 2022. The first one being the 2018 bear market low mark. This is the purple line. The purple line is sitting at about $3,500, and I don't think BTC is going to get back there ever again, or at least, for the foreseeable future, and not this cycle. Probably at the tail end of BTC once it dies in potentially decades or hundreds of years. Moving on to the blue line, the 2020 COVID low. So this was in March of 2020, a famous market crash due to macroeconomics and COVID, when stock market and the crypto market took a pretty big hit. And you can see a massive red candle there for BTC in March of 2020. That price range is around 5,600. Slightly above that is what I call the 2018 November cliff, or equilibrium period. My mouse is hovering over it right here, and this was right after the 2017 bull market. We had an equilibrium period from essentially December through to November, which culminated in a price of around 6,400 before we had complete capitulation and complete fear and a market bottom for 2018 in December that we just looked at around 3,600, 3,500. So this cliff period, to me, this equilibrium period where we had very low volatility before the market crash, is very, very important to me. Really enjoy that equilibrium period for BTC there for at least 6 to 8 weeks, sitting around 6,400, providing wonderful support for BTC. If we move above that, we move into our actual support range. So the support range is two black lines, and it is between 7,900 and 11,200. And this is where we see the bulk of trading for, from May 2019 all the way to September 2020. So for the majorities of 2019 and 20, this is where BTC was trading, was in this black support range, and effectively between 8,000 and 11,500. So if we take a look at our blue boxes, I think this theory still holds true. A repeat of cycles where we oscillate downwards around nearly 70% over about a year from market highs of last November, all the way to, late this year, November, or late October, November, December period, before we do actually have another crash, similar to our November 2018 crash, which could take us down to our support lines. So instead of thinking about 19,000 as a low, I am looking at about 11 to 12,000 as a potential market low later this year. So could be flat and sideways times for the foreseeable future. Now, I don't think it's going to be all bad news. I really think we kind of go down and up, but it just takes a while. So if we were to add a box here, we could potentially add a box from here back up to here and say, you know what, into December, into pretty much early 2024, another year or so, wow, we could be looking at flat and below, 50, 60,000. So we could be seeing a bounce back and then a bounce down and then a bounce back up before we actually break into a brand new bull cycle in 2025. And that's where my thesis has changed. My thesis is updated. And I'm curious to hear about your thoughts on it. That's it for today. Thank you to anyone that got this far. Really appreciate it. In my opinion, looks like we have some trading volume to fill in the teens for BTC. I think BTC under 15,000 is a really, really good deal if we're thinking in long-term cycles. So later this year, if we can start to ease into Bitcoin, dollar cost average in as the price gets into the teens. If you get it under 15, I think it's a great deal. If you get it under 17, probably still a really good deal. Under 20 is probably still a really great deal if we're starting to DCA in now, especially if you're not as bearish as I am. Maybe some other people are expecting a little bit faster recovery than I am, but I think we will go flat and sideways for the rest of the year, especially as Bitcoin fills in the 20,000 range and also the 10,000 range. And that's about it for today. Thank you everyone that got this far. Really appreciate it. See you next week. Bye for now.